So welcome everybody. It's great to be here with you today and coming live from Sydney Climate Action Week. Today is talking about accounting for good and what does true financial leadership look like. I'm Paula Kensington and I'm a pioneer of change in the finance and accounting system. And I feel like I have got some credibility to speak to this topic because I've been working in the realm of finance and accounting for 35 years. I'm an award-winning CFO myself, and I have spent that time in corporate world in Australia and in the UK. And so, I think what we're looking at today is actually going beyond net zero. I think a lot of the business world is thinking about what does it take to get to net zero, but actually what I'm saying is that's not going to get us to where we need to be. We actually need to go beyond that. And go beyond net zero. And how do we do that without freaking out the business world? But equally, is it time to kind of freak out the business world? So let's jump in and have a journey together. We know that continuous growth at the expense of everything else is not sustainable and it's insanity. Yet it's been the only measure. Growth has been the only measure of success, certainly in my 35 years of career at the executive level and at the board level. So if we're not growing, it's always deemed that we're going backwards or we're dying, but literally the growth is killing us. So how do we actually change that narrative? And a bit of a worrying statistic, I think, or certainly interesting statistic is that half of the world's assets under management, so half of the value of the world's business is actually owed back to the planet in terms of the value that we've extracted every year. So just let that sink in for a minute. So half of everything that we think is of value is actually owed back to the planet. And, I think that is not really being incorporated into our current financial and accounting systems. So we know that we need to change systems, we need new measures of success, and we also need to explore new thinking. So finance, I think, is late to the climate party. We're at least 10 years behind where everyone else is. And there's a number of reasons for that. And some of it is because we haven't had, until now, the sort of stick to do better. We haven't had mandated reporting to actually hold ourselves accountable to what is it that we're doing and being transparent about that. So this is a timeline here of the last 40 years. And we don't have time to wait another 40 years to get to somewhere better in business terms than we are today. It's taken us 40 years to actually create one accounting standard that even talks about sustainability. That is pretty horrific. It's good that we've got all of this effort, but we can't take this amount of time to get to the next milestone. What we've seen here in 2021 with the establishment of the International Sustainability Board and the Task Force for Nature disclosed that. But actually, how do we account for the impact is something that's kind of beyond that at the moment. So you can see here, the great work by Kate Raworth and the donut economics and the SDGs, and then that really was the sort of highlight moment of getting people to think about where are we in terms of nature. And at the moment, we've overshot 6 of the 9 planetary boundaries. So that is of obvious concern as well. So I think that the accounting profession is actually in overwhelm itself. It's so glacial in its movement and in its age and its structure and how it can actually maneuver itself to new thinking. I think it's actually found itself in overwhelm. And I know that because I've reached out to a number of the accounting professional bodies and asked them what are the thinking around impact accounting, and they're not even at that table yet. So that kind of is a worry to me as well. So we have here, I think, a rather aspirational picture of when we think we might become net positive. So net positive is kind of beyond net zero. How do we actually start giving back to our planetary, to nature, so that we actually start to see a regeneration of nature of animals, of, of everything that we've been extracting for the last number of 100 years? How do we actually see that positivity coming back? And so this, from the Institute of Nature Positive Institute, is saying that they think by 2030 we will have kind of reversed or got to a zero, and then we're going to see this great recovery in the next 20 years. And I don't want to be the bearer of bad news, but I kind of feel like we've only today got 5,000 companies out of 300 million. 5,000 companies are actually starting to track where they are with the net 2030 target. So that's like 0.002% of companies that are actually even tracking. So how we think we're going to get back on target by 2030 and 2040, I think is being rather aspirational. So what is needed? This is, I think, a shift in our thinking. And I'm talking here about stewardship, I'm talking about the systems that we operate in, and I'm talking about Caritas, which is really about care. So I think the first step to real change is where we think about the intersection of being a financial steward and actually caring about what that means. And so that then looks at evolving business structures. We actually need to do business differently. We need to be different about the decisions that we make and the numbers that we base those decisions on. We need to think about how do we get beyond net zero, breathing life into our spreadsheets. This is where we're actually starting to measure the thresholds and baseline ourselves as to where we are and where we need to get to. And those pathways to how we're going to get to this net zero and beyond are going to be really key. And then something that I've been working on in the last sort of 12 months is this concept of an Earth's balance sheet. What would it look like if we actually had regional balance sheets where we could actually value positives and negatives, and how much do we owe back, as I say, to planet Earth? So let's have a look at what we need to do here. We need to restructure, we need to awaken to new systems and explore something different. So a question I have for the audience and for myself is, what does stewardship actually mean in business? And I've sort of put a couple of pointers here that if the calculations in our finance systems and our spreadsheets, and I know this quite intimately, if our spreadsheet calculations don't change, then nothing's actually really changing in our operations. We can feel like we're doing all the best will in the world at the front end of our business, but the underlying, does this make sense? Does it have an internal rate of return? What is the percentage? How do I make these investment decisions within my business? If that doesn't change, nothing's going to change. So we need to think about how do we bring different measures into our spreadsheets. We've talked about what does Earth's balance sheet look like. I'd be interested to hear what people think about what does that look like for you. We also been talking a lot about we're really lucky in New Zealand, where value is attributed very differently from a number. I was speaking with someone recently in New Zealand. They were talking about the value that the river brings to that community, and how could you possibly put a number on a river? Because actually, it's bringing so much value, so much more value than you can even try and calculate. So how do we leave room for that immeasurable, and how do we calculate things differently? And then finally, another question is around how do we fit into Earth systems and structures? Rather than getting nature to fit into ours, how do we then sort of flip the model and think about how do we fit into Earth structures? We know that nature's been here a lot longer than business has. So how do we think about maybe changing the narrative and changing how we do that? And this is going to come back from the way that we create our internal measures and the way that we create our external measures. And I think really we need to ask harder questions of ourselves. We need to ask harder questions of our board, and we need to ask harder questions of the companies in which we work within. This is a nice example of a different type of business case. So there's three different scenarios here, and rather than just looking at a purely financial metric, there's a different way of putting it together and thinking about what is the impact from a human and social perspective, what might be the impact from an environmental perspective, and what is the economic impact. So back in finance world, often we go to that 70% return scenario 2 and think, great, that's like the best economic return, so let's go for that scenario. But actually, would it be the right scenario to go for? Because actually that's got the biggest detrimental impact from an environment's perspective. So how do we shift that mentality that says, well, maybe we should go for option 3. It's not got the best financial return, but it's actually got a positive impact to the environment and to human and social capital as well. So this is starting to think about business models differently within our own organizations. I'd be really interested to hear whether you're still using the spreadsheet kind of numbers based only, or whether you're starting to bring these visuals and these sort of depicting business case returns in a different way. So this concept of bringing together financial stewardship and the Caritas, this is what I'm thinking about, those two aspects. So, a stewardship mindset requires passion and desire to consider all the stakeholders in a business. And again, as finance professionals, we often think about the stakeholders because they're the ones that are kind of driving the outcomes that they're looking for. So how do we think about non-shareholders and all the stakeholders in which we operate in our nested system? How do we think about the impact we're having on the environment and the nature and the people and all of these aspects? How do we bring that into our decision making? And then how do we actually bring that in with care, like truly earning a license to do business? I think sometimes business now just feels we've just got the right to do business and in any way that we like. And I think that's something that we need to sort of pull the handbrake on and just actually question ourselves, because every decision counts. And we know that some of the measures in our accounting and in our spreadsheets, they're based on elements that we've kind of been learning about for decades. Things like discounting discounting cash flows. So we often make decisions based on the weighted average cost of capital and the net present value based on cash flows discounted back to today's terms. Now, that is taking a fundamental principle that says the time value of money is actually worth less next year than it is today because of inflation and risks and everything else. But that's a fundamental principle that I think we should challenge. The time value of money, is it really that the money's worth more today than it is tomorrow? And so this really challenges the concept of discounting versus compounding. If I'm spending $1 million today to get a positive impact in 5 years' time of $10 million, why shouldn't I be actually compounding that business case and saying this is the better business case because this is actually delivering better value? So that fundamental principle of discounted cash flows, which is throughout the whole financial system, have a real hard look at. And we're not pricing that into our decisions, then how do we actually think about calculating our cost of capital in a different way, bringing in the risk and the adjusted risk? Maybe we need a new measure that says profit after accounting for nature's impact. We all know, I think, what EBITDA means, and it's such a fundamental calculation of earnings before interest, tax, and depreciation. Well, what about earnings after nature's impact? There needs to be some new measures. So here is some work that I've been busy doing in the last 12 months. On the right-hand side is a beautiful nature's depiction of business and how do we think about the way in which we operate. So how do we think about the business model being at the heart of our systems, where value in actually equals value out, where we actually pay the true price for something to actually include the cost, the true cost of getting it there. And we have to then work through that around, what does that mean in terms of expertise to get that product to market? What is the relationship that we've got with that product in market? And what is the financial currency of that product? So this is the business ecosystem sitting within the environmental ecosystem. So we've got communities that we're having impact on. We've got investments that we're having an impact on, or they're having an impact on us. And then there's this inclusivity that is really important to think about within our nested system that we're operating in. So that's my kind of utopian world view of how we think about our business model. And then on the left-hand side, I've got here the pathways. So if we think about the different aspects of our business, we've got these different categories that, we can think about the value in our business. So we'll be familiar with most of them, but how many times do we actually value care? And how many times do we actually value the place in which we're operating in? Are we actually doing business, the right business in the right place with the right community and the right impact that we're having? So there's 8 different categories here that I think are all inextricably linked. So you think about the decisions that we're making from a communication perspective is having an impact around the whole of the ecosystem of our business. And obviously this is internal systems and internal decisions, but that then translate also to external decisions as well. So there's obviously a gap in where we are versus where we need to be. And I think with the accounting standards that are now being mandated from next year, which are going to take 3 years to kind of roll in. So again, what I'm asking us as finance professionals is to actually not wait for regulation to show us the way. We actually need to think about how do we do better business, and what role can I take as a finance professional to actually enable that better business. And so we have got a gap to address, and I think we can do it in a number of ways. We definitely need to be thinking about innovative finance measures. How do we reallocate capital within our business? How do we think about shifting shareholders' mindsets, and even the board's mindsets? How do we shift that? So to say, look, we're not going to have a dividend this year, and these are the reasons why. We have to be innovative in the way that we're working. And that takes courage, I know, because sometimes the finance person has to even, shepherd the CEO, because again, we're in this system of where we've got, we're being rewarded for bad behavior. So how do we think about sort of allocating and restructuring and rebalancing those measures? And then I talk about collaboration here, and that can mean a lot of different things. But for me, it thinks about who can we work with to solve world problems rather than business problems? How do we sort of put down the sort of the guards that we had in place around our competitors and actually work together to solve a problem? Like we look back some 10 years ago when denim and water was obviously thinking about, it takes a lot of water to create denim. Well, Levi didn't try and solve the problem. They got together, I think, 9 of its competitors to say, how do we actually solve this problem together? And there's lots of different examples. There's the Ellen MacArthur Foundation. There's lots of different examples where entities, groups, organizations within business problems. 3 million businesses is going to, I'll give you an option on that in a minute as well. But how do you get involved in the impact accounting ecosystem? So back on my original slide, the International Federation of Valuing Impact have exposure drafts around impact methodology and how to bring that to account. So let's get involved. Let's not wait for the big financial services firms to have a voice for us. Let's not wait for the accounting profession to show us the way. Let's empower ourselves to have those conversations together. So challenging our thinking, as I said, challenging our own thinking, educating ourselves, but also how to educate our executives and our board. And I think, finance professionals, we often don't want to have a voice when we don't know the whole answer. But I think we have to give ourselves permission to not know all the answers and to explore the answers together. And so we shouldn't just hide ourselves away because we don't know the answer. We should be exposing ourselves and saying, how do we find the answers together? And that exploration is around education. So the few questions that I did pose prior to this session that I would get you to think about, and I think if we're having this live session, we would speak to these, but how does accounting capture the true cost of everything, including the externalities? So I spoke to that earlier. How could we? Are there some ideas around how we could do that? Our second question is, when is enough enough? And what are some alternative growth and success and demand levers that we can introduce in our business, or maybe we're already doing in our business? And how do we stop chasing this financial growth to be successful? What does that mean for our stakeholders? What does that mean for the banks and the funders and everyone else who's on our whole supply chain? How do we get them to stop getting us to chase financial growth just to be successful? So if you've got answers to these, I would love to hear from you. I have a bi-monthly conversation. Future Finance Thinkers Lab is an online conversation. I have a global community. And if you are interested and want to have a voice and want to try and add your voice to the community, then come along. The next one's on the 19th of June. I'd love to share that with you. And follow me on my website. I've got 2 green papers here that I've written, and I've written those because a number of reasons, but to sort of bring my own learning together. Nothing like writing a paper to actually then realize how much of this you're actually taking in, because it's a way to actually think about that different thinking. So yes, of course, there's always time for questions. So apologies, I've kind of rattled through that and probably shaken up a lot of your own thinking to do that. What is coming up? What are some of the questions? I'm happy to put them in the chat or to unmute and ask me. Okay, can we speak more about the 50% assets under management?
Yeah, just so.
Oh, so we've got about 15 minutes. Yeah. Okay. Sorry. Yeah. So what do we mean by the assets under management? So the value of business, I guess, is the global assets under management. And I think what we're looking at is, this is what's going back to shareholders, right? So everyone's getting their value from these businesses, and they're getting their dividends, and there's a market to be able to trade shares, and everyone's profiting or creating wealth from the global assets under management. And what I'm saying, well, what the United Nations Environmental Panel was saying, that half of that asset under management is actually owed back to nature. No one's paying back to nature. So no one's giving half of their profits back to nature. That it's done, or to think about that into organizations that are out there working on initiatives with biodiversity, whether that means, it's sort of carbon credits, but, beyond carbon credits, it's like, how do we actually support and give back to nature? I mean, yeah, some of the opportunities that we've seen around nature getting personhood, for example. So how do you give back to a river when you've extracted all this water from a river? How do we actually think about giving back? Maybe businesses invest in being able to actually think about cleaning and purifying rivers where we've exploited and damaged. So again, it's a bit like carbon credits, but going beyond that in a better way. Hope that answered the question. Any other questions?
I'll have a go.
Yeah, Michelle, thank you.
So I arrived late. I'm really sorry about that. You were talking about how do you account for nature in balance sheets?
Yes.
Yeah, so it seems to me that instead of trying to put dollar values on environmental outcomes, we can report in a qualitative rather than a quantitative way.
Mm-hmm.
So you don't have to put a number on your environment outcomes.
Mm-hmm.
I think this is also important in relation to philanthropic activities.
Mm-hmm.
There's a lot of environmental NGOs that partner with business. Like, for example, I know Woolworths has got a land care award somewhere, and Greening Australia and other organisations partner with big business to pursue their environmental objectives.
Mm-hmm.
Now, businesses can report on the amount that they're spending on philanthropic activities in their balance sheets,
Mm-hmm.
but that doesn't mean that you're valuing the environmental outcomes. The
Mm-hmm.
environmental outcomes can be reported in a biophysical way, not in a dollar terms.
Yeah. Yeah.
And
Yeah.
I was
And I
just
think
wondering, Paula, whether you have looked at the nature repair market.
no, I haven't looked at that nature repair market. I mean, I think you make a great point that, and I think that goes back to some of the immeasurable. And that's really I think the Earth's balance sheet is a transition that kind of feels like this is going to be the bridge to a true balance sheet, where where we're not able to put financial measures on things. But I think, what it feels like to me is that we're embedded in a system currently, and how do we get to a different system, and maybe Earth's balance sheet, where we try and have a introduction to that, just to try and think about things differently, could be a good way to think about doing things differently. So yeah, I mean, it's a great point, and I think I'm working at the moment with some bioregions in and around Australia where we can actually think about what might an Earth's balance sheet look like, to be able to think about some of the non-financial pieces. Because, a balance sheet is kind of like a snapshot in time, and it aids comparison, which may or may not be a good thing. But, if regional places want to try and get funding from philanthropic or from council or from business, how does it sort of represent itself to be able to get to Woolies or, have to big business and say, look, we've got these projects, we need $1 million of funding. So whilst I hear what you're saying, that we can't bring everything back to a dollar number, if we're trying to get business to invest in our projects, we have to kind of give it something to be able to say we need X to be able to do Y. I'm hoping that makes sense. But yeah, I'd be really keen to have a look at what you were saying there on nature's, and I can't remember what you said now.
Yeah, so there's a
Nature.
difference between reporting on your own environmental outcomes from your own activities and reporting on the outcomes from your philanthropic, including your engagement in the nature repair market. I'd love to send you a talk that I gave on the nature repair market for your thoughts, Paula.
Repair market. Yeah.
My internet, I don't know if it's my internet or yours, Paula, but you keep breaking up.
It might be mine because I'm pairing off my phone.
Would you be interested in looking at my talk?
Yes, absolutely. Yes.
Could I have your email address?
Yes, sure. I've got yours. I think I've actually sent you an email, Michelle. So let me, I'll find you on the registration address, and actually I can give it to you here personally. I'll do that now.
In the chat?
Yes, in the chat.
Thank you.
Okay, no worries. Well, thank you, everybody. If there's no more questions, I might leave that there. There's something else here from Freya. Thanks for the insights. Okay, good. I'm glad to hear CPA are talking about sustainability. I keep talking to the conference organisers about how they need to put people on stage that are actually talking about the sustainability. One of the points made was that now the economic imperative is clear, capitalism in action for good. Okay, yeah. Yeah, I think the sustainability standards will help. I think definitely they're not going to take us all the way where we need to be, but They're now front and center of the CFO's desk. So that is only going to be good news. All right.
So, Paula, I get way too many emails. I'm sorry, I don't remember what your background was, what you're doing now.
Oh, okay. So I'm a CFO by trade. I'm a finance executive, and I'm pioneering for change in the finance and accounting space.
I really love your comments on the nature repair market. I think it's such an important development. The government passed it in December, and it's now law, and
Okay.
it's a very interesting case.
Yeah, no, thanks for bringing it to my attention. I'll definitely have a look at that, Michelle. Thank you.
Okay.
All right. Thanks, everybody. It's good to be with you. Sorry for the technology and the delay, but yeah, thanks for the comments as well. And please connect with me. I'd love to talk more. Thanks, everybody.
Thank you.